one of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. We do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%.
American banks are still experiencing a problem. Cathie Wood, CEO of ARK Invest, has spoken about her long-term price forecast for the most valuable cryptocurrency asset. The current banking sector insolvency issue, the role of the Federal Reserve in the whole mess, and the inherent benefit for Bitcoin investors were all topics Cathie covered in a Tuesday interview with Bloomberg. All of last year, Cathie Wood warned that the Fed was on the verge of destroying the economy. She went on to explain that the Fed's plans to support the banking crisis will further jeopardize earnings and the health of the economy as a whole. The banking crisis, in contrast, may have a positive side, according to Cathie Wood. The well-known investor asserts that since its initial crashes, Bitcoin has demonstrated its ability to be a really disruptive technology. The leading cryptocurrency asset last week climbed over 37%, finally surpassing $8,000 on Sunday. With the exception of last week's price swings, Bitcoin has now risen beyond $28,000 again after a few days of stability, making it the most expensive it has been since June 2022. According to Cathie Wood, who spoke with Bloomberg, the banking crisis has put Bitcoin's value proposition front and center, which will draw more institutional investors to the digital asset. Please spend a moment liking this video, subscribing to the channel, and turning on post alerts for more content like it before we listen to Cathie Wood's interview and flimsy Bitcoin predictions. The YouTube algorithm is impacted by everything you do, increasing the number of people who see our content. Thank you and have fun with the video.
Well, I think they're addressing the liquidity issue, but not really the solvency issue from our point of view. A couple of things have happened here that have never happened really in history, and so the banks didn't expect it. The first was interest rates up 19-fold in less than a year. Never happened. Under Volcker, which it was twofold, 10 to 20%. And the low base does matter. Many people dismissed it saying, oh, just such a low base. No, expectations were low base. So that was the first. We've never seen that magnitude of an earthquake, I would say. Then the second thing that no one expected, again, because it hasn't happened in such a long time, was deposits leaving the system. For Silicon Valley Bank, it was venture capital facing a funding drought, and so they had to draw down their deposits. But then for others, you've got money market funds paying much higher than deposits, attracting flows. So that combination was lethal. And so now they have the backstop in. Now what do we have? We have they're going to be paying up if they're depending on the facility. They'll pay roughly 4.37% right now is that rate, OIS plus 10. And that's much higher than many of them have been paying for deposits, number one, while in the case of Silicon Valley Bank, their average held to maturity security on the asset side of their balance sheet was only 1.6. So they're going to see net interest losses. Now, instead of having mark-to-market hit equity, these losses are going to hit earnings. Before COVID, as we were descending into that, and we are saying now, innovation solves problems. And you showed a few charts at the beginning that suggest that some of the innovators out there are solving problems. I mean, I think the most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now. And so a flight to safety, a little bit of an insurance policy. There's no central point of failure in Bitcoin.
We know you're a long-term investor with long-term calls, but what on earth gets us to that bull case of almost $1.5 million per Bitcoin if a bank crisis doesn't?
One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. You'll find the building blocks of those price targets in our Big Ideas 2023. So ARC Big Ideas 2023, and they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. So not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets and small cap in the 80s and 90s.
We did see signaling from the Fed. They did tell us they were going to be hiking rates and hiking rate fast. Why then didn't you move your portfolio around more?
Well, the premise of the question is that we're an asset allocator. We are not. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK, and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people in the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names. Yeah. And so that is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows the benefits of this concentration strategy during risk off and diversification strategy during risk on. So we're the closest thing to a venture strategy to a venture capital fund in the public equity markets. And a venture fund has a long-term investment horizon. If an investor cannot have that long-term an investment horizon, then they should allocate perhaps a small amount to our strategy, say 1 or 2%, which, by the way, from what we can tell, most advisors have us at that 1 to 3% range. Now, why would you put any if the risk was the volatility that you see on this chart? It is because our companies are going to disrupt the traditional world order. And if we're right, then the large cap benchmarks and even some of the mid cap funds are going to be disrupted. We will be a hedge. Now, I will say and submit to you that last year was the most unusual year of my investment career. And not only mine, but bond investors. So bond investors had the worst year in 200 and some odd years. When interest rates go up 19-fold in less than a year, it's going to kill long duration assets. Bonds are long duration assets. They've never seen a year like that. ARK is a long duration asset. But if we're right, and these companies are going to disrupt the traditional world order, then we want to be on the right side of change, and the market will come our way, away from those benchmarks, which represent the traditional world order, to our strategies.
What do you think of the Bitcoin predictions made by Woods and Lynch? Do you believe that institutions will be more motivated to invest in Bitcoin and other leading cryptocurrencies going forward than they were prior to the start of the banking crisis? In the section below, please share your thoughts and views. Don't forget to like this video, subscribe to the channel, and enable post notifications to ensure that you don't miss any of our regular uploads. Many thanks for tuning in.